Hello everyone and welcome to today's comprehensive lecture on GST registration. I am excited to guide you through one of the most fundamental aspects of the goods and services tax system in India. GST registration is not just a procedural requirement, it's the gateway that legally identifies you as a supplier in the GST ecosystem. Today, we'll explore everything from who needs to register, when and how to register, to the various processes involved in maintaining your GST registration. Let's begin by understanding what we'll be covering in today's session. Our topic objectives include several key areas that are crucial for anyone dealing with GST compliance. First, we'll discuss person liable for registration. Essentially, who must register under GST and under what circumstances? This is fundamental because not everyone needs GST registration, and understanding the criteria is essential. Second, we'll examine persons not liable for registration. There are specific categories of people and businesses that are exempt from GST registration, and knowing these exemptions can save unnecessary compliance burden. Third, we'll explore suo motu registration by proper officer. This is when the tax authorities themselves initiate registration for a person who should have registered but hasn't. Fourth, we'll walk through the procedure for registration, the step-by-step process of how to actually get registered under GST. Fifth, we'll understand issuance of registration, what happens after you apply and how you receive your registration certificate. Sixth, we'll cover amendment of registration because business circumstances change and your registration details may need updates. Seventh, we'll discuss cancellation of registration, when and how registrations can be cancelled. And finally, we'll examine revocation of cancellation of registration, the process of getting a cancelled registration restored. These 8 areas will give you a complete understanding of the GST registration landscape. GST registration serves 4 primary purposes, and I want you to understand each of these clearly. First is legal identification. GST registration legally identifies a supplier of goods or services. Think of it as your business identity card in the GST world. Without this registration, you cannot legally function as a GST compliant supplier. Second is tax collection. The registration authorizes you to collect taxes from your customers and pass on tax credit to recipients. This is crucial because it makes you a legitimate link in the GST chain, allowing you to charge GST on your supplies and remit it to the government. Third is input tax credit. Registration enables you to claim and utilize input tax credit, commonly known as ITC, for your tax payments. This means you can offset the GST you paid on your purchases against the GST you collect on your sales. Fourth is compliances. Registration ensures adherence to GST provisions. Once registered, you become part of the formal tax system with specific rights and obligations. Let me explain the legal framework that governs GST registration. GST registration is comprehensively governed by multiple legal instruments. Under the CGST Act, sections 22 to 30 contain all the primary provisions related to registration. These sections cover everything from liability to register to the process of registration and eventual cancellation. Under the CGST rules, Rules 8 to 26 provide the detailed procedural aspects. While the Act gives you the broad framework, the rules give you the specific procedures, forms, and timelines. It's important to note that there are identical provisions under state GST laws. This means that whatever applies under central GST also applies under your respective state GST or union territory GST. Now let's examine the key features that make GST registration unique and different from the previous tax systems. The first key feature is state-wise registration. You are required to register in every state UT where you make taxable supplies. However, and this is important, you are exempt from registration if you are only making non-taxable supplies in a particular state. The second feature is PAN-based registration. Here's something very convenient. You get a single registration per PN for operations across states while UTs. But within a single state, you have the option to register multiple businesses. You can have one as your principal place of business, which we call PPOB, and others as additional places of business, or APOB. The third feature is single registration for all taxes. One beautiful aspect of GST is that a single registration covers CGST, SGST, UTGST, IGST, and GST compensation cess. You don't need separate registrations for different types of GST. Before we dive into who needs to register, let's understand what constitutes a taxable person under GST as defined in Section 2(107) of the CGST Act. A taxable person has two categories. The first category is a registered person, someone who is already registered under GST and is actively part of the system. The second category is a person liable to register under specific criteria. This is further divided into two subcategories. Under Section 22, we have threshold-based registration. This means people who cross certain turnover limits become liable to register. This is the most common scenario for small and medium businesses. Under Section 24, we have mandatory registration regardless of turnover. Certain categories of persons must register under GST regardless of how much business they do. This includes people making interstate supplies, non-resident taxable persons, and several other categories. Now let's examine the circumstances under Section 22 that create liability for GST registration. First is threshold limit. A supplier becomes liable for registration when crossing the threshold limit of aggregate turnover, as specified in Section 21(1). This is the most common trigger for registration, and we'll discuss these thresholds in detail shortly. Second is previous registration. Any person who was registered under the earlier tax law, such as VAT, service tax, or central excise, shall be liable to be registered under GST as per Section 21(2). This ensures continuity from the old system to the new GST system. Third is business transfer. When there is a transfer of business on succession or otherwise, the transferee shall be liable to be registered from the date of transfer according to Section 21(3). This ensures that the tax liability doesn't disappear when business ownership changes. Fourth is amalgamation and demerger. In cases of amalgamation or demerger, the transferee shall be liable to be registered as stated in Section 21(4). This covers corporate restructuring scenarios. To understand threshold-based registration, we must first understand what aggregate turnover means. According to Section 2(6) of the CGST Act, aggregate turnover means the aggregate value of all outward supplies. But what does this include? The includes are comprehensive. taxable supplies, exempt supplies, exports of goods or services, interstate supplies, and supplies subject to CGST, SGST, UTGST, IGST, cess. It also includes inward supplies on which tax is payable under reverse charge mechanism or RCM. The excludes are important too. The definition specifically excludes certain items to avoid double counting or inappropriate inclusions. A crucial point to remember is that aggregate turnover is computed on an all India basis for the same PAN. This means if you have businesses in multiple states under the same PAN, you will add up the turnover from all states to determine if you've crossed the threshold. There are also specific provisions for job workers. The aggregate turnover includes all supplies made by the taxable person, whether on his own account or made on behalf of all his principals. However, when a registered job worker supplies goods after completion of job work, it's treated as supply by the principal, and the value is not included in the job worker's aggregate turnover. Now, let's look at the specific threshold limits that trigger registration liability. These limits are specified in section 22(1) and notification number 10, 2019 Central Tax, dated 7th March 2019. The thresholds vary based on the type of supplies and the location of your business. For Tripura, Mizoram, Manipur and Nagaland, the threshold limit is 10 lakhs rupees for both persons engaged exclusively in supply of goods and those engaged in supply of services or both goods and services. For Uttarakhand, Sikkim, Arunachal Pradesh, Meghalaya, Puducherry and Telangana, the threshold limit is 20 lakhs rupees for both categories. For other states, there is a distinction. If you are engaged exclusively in supply of goods, your threshold is 40 lakhs rupees. However, if you are engaged in supply of services or both goods and services, your threshold is 20 lakhs rupees. However, there is an important exception. The enhanced threshold limit is not applicable to persons engaged in making supply of specified goods. These are certain categories of goods where the government wants to ensure registration regardless of the higher thresholds. Let me highlight some crucial points about threshold-based registration that often cause confusion. First, a person is required to obtain registration with respect to each place of business in India from where a taxable supply has been made. Note, not where it is delivered, but from where it's made. Second, no registration is required in a state UT where only non-taxable or exempt supplies are made. This is logical because if you're not making any taxable supplies, there's no need for GST registration. Third, supplies within the same state between principal place and additional place shall not be treated as supply under GST. This prevents artificial inflation of turnover due to inter-branch transfers. Fourth, registration is required to be obtained only in the state/UTs where the supplier has a fixed establishment. Temporary presence doesn't trigger registration liability. Fifth, here's the critical point. If a person with places of business in different states across India has one branch in a special category state, the threshold limit for GST registration will be rupees 10 lakh or rupees 20 lakhs for the entire business, not just for the special category state operations. However, if only exempt non-taxable supplies are made in a special category state, the threshold is not reduced. This prevents unnecessary burden on businesses that have minimal taxable operations in these states. Finally, and this is very important, the supplier must make at least one taxable supply to be liable to be registered. If a supplier makes only exempt supplies, then he shall not be liable to be registered under GST by virtue of Section 23(1). Let me explain the registration liabilities that arise in business transfer scenarios, which are covered under Sections 21(3) and 21(4). For transfer of business under Section 21(3), when a business is transferred, whether on account of succession, like in case of death of a sole proprietor, or any other reason including change in ownership, to another person on a going concern basis, the transferee or successor must register from the date of transfer. This ensures continuity of GST compliance when business ownership changes. The law recognizes that the business continues even though the ownership has changed. So, the GST registration liability also continues. For amalgamation, demerger under Section 21(4), this covers more complex corporate scenarios. If the business is transferred due to a scheme or arrangement of amalgamation or demerger of two or more companies, pursuant to an order of a high court or tribunal, the transferee must register from the date the registrar of companies issues the certificate of incorporation for the new entity. Now let's move to Section 24, which deals with mandatory registration regardless of turnover. Let me go through each category. Person making interstate taxable supplies. Generally, anyone making interstate supplies must register. However, there's a threshold limit of rupees 20 lakh, rupees 10 lakh for special category states, available for interstate supply of taxable services and notified handicraft goods. Casual taxable persons, CTP. These are persons who occasionally undertake transactions involving supply of goods or services in the course of business. They must register, but the same threshold exemption applies for services and handicraft goods. Persons required to pay tax under reverse charge mechanism (RCM) for inward supplies. If you are receiving services where you need to pay GST under RCM, you must register. However, persons engaged only in making outward supplies liable to reverse charge are exempt. Non-resident taxable persons, NRTP, making taxable supplies. Any non-resident making taxable supplies in India must register. Electronic commerce operators, ECOs, liable to pay tax on specified services under Section 9(5) and those required to collect tax under Section 52. Suppliers making supplies via ECOs, except those supplies under Section 9(5). If you are selling through e-commerce platforms, you generally need to register, but there's a threshold exemption of rupees 20 lakh, rupees 10 lakh for special category states, for interstate supply of taxable services through ECO. Persons required to deduct tax under Section 51. If you are required to deduct TDS under GST, you must register. Persons making taxable supply of goods or services on behalf of other taxable persons as an agent or otherwise. Input Service Distributors, ISD. These are entities that receive invoices for services and distribute the credit to other entities. Persons supplying online information and database access or retrieval, OIDAR services from a place outside India to a person in India. Any other person notified by the government based on GST Council recommendations. Now let's understand who is not required to register under GST as specified in section 23. Supplier of exempt or non-taxable supplies. Persons engaged exclusively in the business of supplying goods or services that are either not liable to tax or wholly exempt from GST don't need to register. This makes sense because if you are not dealing with taxable supplies, there is no need for GST registration. Agriculturist, individual or HUF. An agriculturist, whether individual or Hindu. Undivided family to the extent of supply of produce out of cultivation of land is not required to register. This exemption recognizes the special nature of agricultural activities. Persons notified by government. The government can notify specific categories of persons who don't need to register. Currently, this includes persons making only reverse charge supplies, persons making interstate supplies of taxable services up to rupees 20 lakh, rupees 10 lakh for special category states of Mizoram, Tripura, Manipur and Nagaland. Persons making interstate taxable supplies of notified handicraft goods up to the same limits, provided they have obtained a PAN and have generated an e-way bill. Casual persons making interstate taxable supplies of notified handicraft goods up to the same limits with PAN and e-way bill. Let me explain the geographical and temporal aspects of GST registration application as specified in section 25(1). The rules vary based on the type of person applying. For persons liable to be registered under section 22 or section 24, you must apply in every state/UT where you are liable to register, and you must do so within 30 days from the date on which you become liable to registration. This 30-day timeline is crucial and non-compliance can lead to penalties. For casual taxable person or non-resident taxable person, you must apply in every state UT where you are liable to register, but you must do so at least 5 days prior to the commencement of business. This advance requirement ensures that these special categories of taxpayers are registered before they start their operations. For persons making supplies from the territorial waters of India, this covers offshore activities. You must apply in the coastal state (UT) where the nearest point of the appropriate baseline is located within 30 days from the date on which you become liable to registration. Let me explain the GST registration framework as outlined in section 25(2). Read with rule 11. State-wise registration. There is no centralized registration under GST. You need separate state-wise registration for businesses with branches in different states. Each state treats you as a separate entity from a GST perspective. Single registration. However, within a single state, you get single registration for multiple branches. You can declare one place as principal place of business, PPOB, and other branches as additional places of business, APOB. This simplifies compliance within a state. Option for separate registration with multiple locations in a single state UT. Here's where it gets interesting. If you have more than one place of business in the same state UT, you can choose to have separate registrations for each location. But there are conditions. You must have more than one place of business in the state UT. You cannot pay tax under composition levy. Section 10. If you are paying tax under normal levy for any other location, you must pay tax on goods or services supplied between registered locations and issue tax invoices for such transactions. You need to submit separate applications in Form GST Reg 01 For each business location, SE's unit registration. Special economic zone units require separate registration, recognizing their unique operational environment. Now let's discuss an interesting provision: voluntary registration under Section 25(3). Voluntary registration. A person not mandatorily required to register under GST as per the turnover thresholds, Section 22, or the specified conditions, Section 24, may opt to get himself registered voluntarily. This is entirely at the discretion of the business. Applicability of provisions. Once voluntarily registered, the individual or entity becomes subject to all provisions of the GST Act applicable to registered persons. There are no special relaxations just because you registered voluntarily. Tax liability. Even if the aggregate turnover does not exceed the threshold limits, whether rupees 40 lakh, 20 lakh or 10 lakh. Depending on your case, the voluntarily registered person is required to pay tax on their supplies. You cannot escape tax liability by claiming voluntary registration. Purpose of voluntary registration. Why would someone voluntarily register? Typically, it's obtained by businesses to ensure a seamless flow of input tax credit (ITC) to their customers. When you're registered, your customers can claim ITC on purchases from you. This enhances credibility and compliance in the supply chain, making you a more attractive supplier. Now let's discuss an interesting provision: voluntary registration under Section 25(3). Voluntary registration. A person not mandatorily required to register under GST as per the turnover thresholds, Section 22, or the specified conditions, Section 24, may opt to get himself registered voluntarily. This is entirely at the discretion of the business. Applicability of provisions. Once voluntarily registered, the individual or entity becomes subject to all provisions of the GST Act applicable to registered persons. There are no special relaxations just because you registered voluntarily. Tax liability. Even if the aggregate turnover does not exceed the threshold limits, whether rupees 40 lakh, 20 lakh or 10 lakh. Depending on your case, the voluntarily registered person is required to pay tax on their supplies. You cannot escape tax liability by claiming voluntary registration. Purpose of voluntary registration. Why would someone voluntarily register? Typically, it's obtained by businesses to ensure a seamless flow of input tax credit (ITC) to their customers. When you're registered, your customers can claim ITC on purchases from you. This enhances credibility and compliance in the supply chain, making you a more attractive supplier. Sometimes, the tax authorities themselves initiate registration for persons who should have registered but haven't. This is called suo motu registration, covered under Section 25(8), read with Rule 16. Let me walk you through this process. Identification of non-registered persons. The process begins when, pursuant to survey, enquiry, inspection, search, or other proceedings under the GST Act, the proper officer identifies that a person liable to registration has failed to apply for registration. Temporary registration. The officer then issues an order in Form GST Reg 12, which registers the person on a temporary basis. The registration becomes effective from the date of this order. Application for permanent registration. Every person granted temporary registration has two options: Apply for permanent registration within 90 days from the date of grant of temporary registration. File an appeal within 30 days from the date of the temporary registration order post-appeal obligation. If the person chooses to appeal and the appellate authority upholds the liability, the person must apply for permanent registration within 30 days from the date of the appellate order. Verification and issuance of permanent registration. If the person applies for permanent registration, the normal verification rules apply. Rule 9 for verification of the application and Rule 10 for issuance of the certificate of registration. Effective date of permanent registration. The effective date of permanent registration will be the same as the date of the order granting temporary registration, ensuring continuity. PAN requirement. Every person applying for GST registration must have a PAN issued under the Income Tax Act 1961 to be eligible for registration. This creates a strong link between income tax and GST systems. However, there are important exceptions to PAN requirement. Registration of tax deductor or collector under GST. Persons required to deduct tax (TDS) under Section 51 of the CGST Act can use a tax deduction and collection account number (ETN) instead of a PAN. TAN issued under the Income Tax Act allows such persons to obtain GST registration. This recognizes that entities deducting tax may not always need a PAN. Registration of non-resident taxable person (NRTP). Non-resident taxable persons do not require a PAN for GST registration. They may use prescribed alternative documents for registration. Rule 13(1) specifically allows NRTPs to apply using a self-certified copy of their passport. Now, let's walk through the detailed procedure for GST registration for regular applicants. That is, other than CTP, NRTP, persons liable for TDS and TCS, and persons supplying OIDAR services. This process is governed by Section 25, read with Rules 8, 9, and 10. PAN and State Declaration. The process begins when every person, before applying for registration, declares his permanent account number (PAN) and state duty in Part A of Form GST Reg 01 on the GST Common Portal. PAN validation. The PAN is validated via the CBDT database through OTP verification sent to the mobile number and email linked to the PAN. This ensures that only legitimate PANs are used. Generation of TRN. Upon successful PAN, mobile, and email validation, a temporary reference number (TRN) is generated and sent via email and SMS. This TRN is crucial for the next steps. Submit Part B of Form GST Reg 01. Using the TRN, you submit Part B of Form GST Reg 01 containing comprehensive business information like constitution of business, jurisdiction, reason to obtain registration, promoter partner details, authorized signatory details, address details for PPOB and APOB, bank details, and option to composition scheme if applicable. Aadhaar authentication. You need to authenticate Aadhaar details of the authorized person and promoter partner. This is a critical step for verification. ARN generation. You verify and submit the application using digital signature or Aadhaar e-sign. On signing Part B of the application, an acknowledgement GST Reg 02 is generated with an application reference number ARN. Application forwarded. Finally, the application is forwarded to the proper officer for processing. Let me explain the Aadhaar authentication requirement, which has been introduced to enhance compliance and prevent misuse of the GST system. Purpose of Aadhaar authentication. Aadhaar authentication has been introduced under GST to enhance compliance and curb misuse of the simplified registration process. This process applies to both new applicants and existing registrants and follows the provisions of sections 25, 6A, 6B, 6C, and 6D, along with corresponding rules. Applicability of Aadhaar authentication. All new applicants must complete Aadhaar authentication as part of their registration process. Mandatory for new applicants, authentication is completed during the registration process using Form GST Reg 01. While opting for Aadhaar authentication, the applicant needs to select at least one primary authorized signatory and one promoter partner Carta directors member for authentication purposes. Applicability to existing registrants. Existing taxpayers and composition taxpayers are required to complete Aadhaar authentication for continued GST registration validity. The Aadhaar authentication will be needed only for one primary authorized signatory and one promoter/partner/Carta director/member. Let me walk you through the Aadhaar authentication process for new applicants and its implications. Opting for Aadhaar authentication. During the GST registration process, applicants may opt for Aadhaar authentication. This is generally recommended as it speeds up the process. Authentication steps. The GST system sends an authentication link to the registered mobile numbers and email IDs of promoters/partners and authorized signatories. Upon clicking the link, the applicant enters the Aadhaar number and the OTP sent to the Aadhaar linked mobile number and email. Deficiency or incomplete application. If the application or supporting documents are found deficient or incomplete, or if the proper officer requires additional clarification, the PO will issue a notice electronically in Form GST Reg 03 within 7 working days from the application submission date. The applicant must respond in Form GST Reg 04 within 7 days from receipt of the notice. If Aadhaar authentication is not opted or fails, here's what happens in such cases. The application is marked for mandatory site visit by tax officials. The application is deemed approved after 30 days if no action is taken by the tax official. If a show cause notice (SCN) is issued, the applicant gets 7 days to respond. Now let me explain the Aadhaar authentication requirements for existing registered persons, which is equally important. Authorized signatory requirement. Every registered person who has been issued a certificate of registration is required to undergo Aadhaar authentication. This applies to all existing registrants, not just new ones. Procedure. Aadhaar authentication is completed using the GST portal via Aadhaar authentication link and uploading eKYC documents. Entity-wise requirements. Different types of entities have different persons who need to authenticate. Proprietorship, proprietor, partnership, firm, any partner. HUF, Carta. Company, managing director or whole-time director. Trust, trustee. AOP, BOI or society. Any of the members of the managing committee. Consequences of failure. If Aadhaar authentication fails, the consequences are severe. Registration shall become invalid. 2. The registered person becomes ineligible for filing application for revocation of cancellation of registration. Rule 23. Filing refund application in form RFD01. Rule 89. Refund of IGST paid on goods exported out of India. Rules 90. Now what happens when Aadhaar is not assigned to a person as covered in the rules? For new applicants, alternate identification. If Aadhaar is not assigned, alternate identification methods must be offered as per Rule 9(2). Physical verification. Registration is granted after physical verification of the principal place of business within 30 days in these cases. Aadhaar authentication is not opted for or fails. Application is identified for verification based on risk parameters currently piloted in Gujarat. Proper officer deems it necessary with approval from an officer not below Assistant Commissioner rank. Clarifications, deficiencies. If information documents are deficient, a notice is issued within 7 working days and the applicant must respond within 7 working days. For cases requiring site verification, the notice for clarification must be issued within 30 days of application submission. For existing registered persons, Rule 10(b). Alternate identification. If Aadhaar is not assigned, the person must provide A. Aadhaar enrollment ID slip and B. Any one of these documents, bank passbook with photo, voter ID, passport or driving license. Mandatory Aadhaar authentication. Once Aadhaar is allotted, authentication must be completed within 30 days. Consequences of non-compliance. Failure to authenticate Aadhaar or furnish alternate identification will render the registration invalid and the person will be treated as unregistered under the Act. Let me explain who is exempt from Aadhaar authentication requirements under Section 25, 6(d). The following categories of persons have been exempted from Aadhaar authentication. Non-citizens of India. Foreign nationals are exempt, which is logical since Aadhaar is only for Indian residents. Departments and establishments of central or state government entities are exempt, recognizing their official status. Local authorities. This includes municipal corporations, panchayats, and other local governing bodies. These are considered trustworthy entities due to their statutory nature. Statutory bodies. Bodies created by specific statutes are exempt. Public sector undertakings, PSUs. Government-owned companies and enterprises are exempt. Persons applying for UIN, those applying for unique identification number under Section 25(9) are exempt. UIN is typically for UN bodies, embassies, and similar entities. Let me walk you through the detailed process flow for issuance of registration certificate, which shows how the proper officer examines applications. The process starts when the proper officer examines the application and accompanying documents. The first question is, has the applicant successfully validated his Aadhaar authentication? If no, the PO may proceed to site verification. If yes, the next question is, does PO deem it fit to carry out site verification? If yes, site verification is conducted. Simultaneously, the PO checks, are documents in order? If no, the PO issues notice seeking clarification, the information, the documents from applicant electronically within 7 working days from application submission date. The applicant must furnish clarification information documents within 7 working days from receipt of the notice. Then the PO evaluates. If PO is satisfied with the response within 7 working days from receipt of clarification. If the PO is not satisfied at any stage, he may issue show cause notice or reject the application with reasons recorded in writing. If everything is satisfactory, registration is granted within 30 working days from application submission date. This systematic process ensures thorough verification while maintaining timely disposal of applications. Approval and certificate generation under Rule 10. Once the application for registration is approved by the proper officer, a certificate of registration is issued in Form GST Reg 06. The certificate will show the principal place of business PPOB and any additional place of business APOB. It is duly signed or verified through an electronic verification code EVC by the proper officer. GSTIN communication. The Goods and Services Tax Identification Number GSTIN is communicated to the applicant within 3 days after the grant of registration. GSTIN format. The Goods and Services Tax Identification Number follows a specific 15-digit format. Let me break this down for you. State code. The first 2 digits represent the state code. PAN. The next 10 digits are your PAN number. Entity code. The 13th digit represents the entity code within the state for the same PAN. Checksum. Character. The final 2 digits are checksum characters for validation. Display requirements under Rule 18. Every registered person has mandatory display requirements. Display their GST registration certificate in a visible location at their principal place of business, PPOB, and at all additional places of business, APOB. Display their GSTIN on the name board at the entrance of their PPOB and all APOBs. The effective date depends on when you submit your application. If application is submitted within 30 days of the applicant becoming liable to registration, then the effective date is the date on which the person becomes liable to registration. This means your registration is given retrospective effect back to when you actually became liable. If application is submitted after 30 days of the applicant becoming liable to registration, then the effective date is the date of grant of registration. This means you lose the benefit of retrospective registration. This provision incentivizes timely registration. If you register within the prescribed 30-day period, you get the benefit of registration from the date you actually became liable. However, if you delay beyond 30 days, your registration only takes effect from when it's actually granted, potentially creating a compliance gap. This is why it's crucial to monitor your turnover and register promptly once you cross the threshold limits or become liable under any other provision. Let me explain the special registration provisions for casual taxable persons (CTP) and non-resident taxable persons (NRTP), which have unique requirements. Mandatory registration. Both CTP and NRTP must register under GST regardless of the turnover limit, at least 5 days before starting business. This advance registration ensures they're compliant before commencing operations. PAN requirement. CTP must have a PAN for registration. NRTP can register with alternate documents if they don't have an Indian PAN. They must provide self-attested passport copy for individuals or tax identification number or equivalent document for foreign entities. The registration is verified by an authorized Indian resident with a valid PAN. Registration validity valid for the earlier of the specified period in the application or 90 days from the registration date, can be extended for up to an additional 90 days with an application before expiry. Advance tax payment, CTP and RTP must pay an advance tax deposit equal to their estimated tax liability for the period of registration. A temporary reference number, TRN, is issued for the deposit, which is credited to their electronic cash ledger. For an extension, an additional deposit is required based on the estimated liability for the extended period. Application process, CTP, applies using the normal registration form GST IH01. NRTP applies using a separate form. Registration is granted only after verification and payment of the advance tax deposit. These special provisions ensure that temporary and non-resident taxpayers are properly regulated while accommodating their unique circumstances. Let me explain the different types of fields in the registration certificate, which determines how amendments are processed. Core fields in registration certificate. These are fundamental details that require formal approval for changes. Legal, a trade name of business, if not changed in PAN. Principal place of business. Additional place of business, other than change in state. Addition or deletion of stakeholders, partners, CARTA, managing directors, and whole-time directors / members of managing committee of associations, board of trustees, chief executive officer, or equivalent, etc. Non-core fields. These are operational details like names of functionaries, email IDs, mobile numbers, etc. These can be changed without formal approval. Now let me explain the amendment process under Section 28 and Rule 19, which allows you to update your registration details when circumstances change. Amendment process. Core field changes. Apply for amendment by submitting form REG 14 within 15 days of the change. Approval from the proper officer is required within the next 15 days. Non-core field changes. No approval is required. Taxpayer can make changes directly on the common portal. Changes in mobile number and email ID are verified through OTP. Guidelines for processing amendments. Proper officer must approve amendments to core fields after due verification within 15 days. Using form RAG 15, proper officer cannot reject amendments without giving the taxpayer an opportunity to be heard. If amendments are to be rejected, proper officer must issue a show cause notice, SCN, in form REG 03 within 7 days. The taxpayer must respond to the SCN in form REG 04. If unsatisfied with the response, the proper officer may reject the amendments in form REG 05. Important points. A change in one GSTIN will apply to all GSTINs under the same PAN. Amendments take effect from the application submission date. Changes cannot take effect from a date earlier than the application submission date unless approved by the Commissioner with reasons recorded. Approval, rejection under SGST, UTGST is automatically valid under CGST. Let me explain the limitations and automatic approval mechanism in the amendment process. Automatic approval. The amendment is deemed approved and the updated certificate will be available on the portal if the proper officer fails to act within 15 working days of application submission or within 7 working days of the taxpayer's response to a show cause notice. This ensures that taxpayers are not stuck due to administrative delays. Limitations. There are certain changes that cannot be done through amendments. Change in PAN. GST registration is PAN based, so any PAN change requires a new registration. This typically happens when there's a change in business constitution. For example, when a proprietorship converts to a partnership or a company. Interstate relocation. GST registrations are state specific. Moving your principal place of business to a different state requires cancellation of the current registration and applying for a fresh one in the new state. Now, let's move to cancellation of registration under Section 29. Cancellation can happen in two ways, and understanding both is important. Cancellation can be initiated on application of registered person or his legal heirs in case of death of such person, suo motu by proper officer. When certain conditions are met, both routes have specific procedures and requirements that we'll explore in detail. Cancellation is a significant step that affects your compliance obligations and business operations, so it's important to understand when and how it can happen. Now, the circumstances when registered person can apply for cancellation, discontinuance of business or closure of business, when you permanently stop your business operations, transfer of business on account of amalgamation, merger, demerger, sale, lease, etc. When your business is transferred to another entity through various corporate or commercial arrangements. Change in constitution of business leading to change in PAN. When your business structure changes fundamentally, requiring a new PAN, you need to cancel the old registration. Death of sole proprietor. When a sole proprietor dies, the registration typically needs to be cancelled unless the business is continued by legal heirs. Taxable person no longer liable to be registered. This includes those who have taken voluntary registration but are no longer liable to be registered under GST, perhaps due to reduced turnover or change in business nature. Any other reason. This is the catch-all provision that must be specified in the application. These provisions ensure that the registration database remains current and accurate. Let me explain the circumstances where the proper officer may cancel registration suo motu without application from the taxpayer. Prescribed contraventions. Rule 21. Various specific violations that warrant cancellation. No business activity. When no business activity is conducted from the declared place of business. This indicates that the registration is not being used for legitimate business purposes. Fake invoicing. Issuance of invoices, bills without actual supply of goods or services. This is a serious violation that undermines the GST system. Anti-profiteering violations. When businesses do not pass on tax benefit of reduction in tax rate or benefit of ITC to the recipient, violating section 151 or related rules. Rule 10A. Non-compliance. Failure to comply with Rule 10A, which relates to failure to furnish bank account details. ITC violation. Availment of input tax credit. ITC in violation of section 16 or related rules. GSTR discrepancies. When GSTR 1 outward supplies exceed the outward supplies declared in GSTR 3B, indicating potential manipulation of data. ITC ledger restriction. Violation of restriction on using ITC in the electronic credit ledger under Rule 88B. Now, let me explain the additional specific grounds under which proper officer may cancel registration suo motu. Non-commencement of business. Voluntary registrants who have not commenced business within 6 months of registration can have their registration cancelled. Non-filing of returns. Composition dealers. If they have not furnished annual return within 3 months from the due date. Other registered persons. If they have not furnished returns for continuous periods of 6 months or 2 tax periods. Fraudulent registration. When registration was obtained by fraud, willful misstatement, or suppression of facts. These specific grounds target various forms of non-compliance and fraud, ensuring system integrity. Let me walk you through the procedure for cancellation of registration by a registered person under Rule 20. Submission of application. A registered person seeking cancellation must electronically submit application in Form Reg 16 within 30 days of the occurrence of the event warranting cancellation. The application must furnish the following details: inputs held in stock or contained in semi-finished, finished goods on the date of cancellation, capital goods held in stock on the cancellation date, liability on such stock or goods, and details of payment made, if any, against such liability. Any relevant supporting documents. Verification of application for cancellation. The proper officer shall verify the application and issue an order of cancellation if the applicant is no longer liable to be registered. However, applications may be delayed or rejected in the following circumstances. Incomplete application. GST Reg 16, i.e., all relevant particulars such as details of stock, capital goods, liability, and payments have not been entered. If the applicant's business is being transferred, merged, or amalgamated, and the new entity to which the business is being transferred has not yet obtained GST registration before the application submission. This process ensures proper documentation and prevents tax evasion through cancellation. Now, the final step in the cancellation process by registered persons. Issuance of cancellation order. The order for cancellation must be issued in Form GST Reg 19 by the proper officer. Effective date. The effective date of cancellation shall be the same as the date specified by the applicant in Form GST Reg 16 not precede the date of application for cancellation. This means you can request cancellation from a past date. For example, when you actually stopped business, but it cannot be earlier than when you applied for cancellation. This provision prevents retrospective cancellation that could be misused. Now let me explain the procedure for suo motu cancellation by the department under Rule 22, Issuance of Show Cause Notice, SCN. The proper officer, PO, can cancel the registration suo motu but only after issuing a show cause notice, SCN, in Form GST Reg 17 and providing the registered person with a reasonable opportunity of being heard. The SCN specifies the reasons for proposing the cancellation of the registration. Reply to SCN and resolution. The taxpayer must submit a reply to the SCN in Form GST Reg 18 within 7 days of receiving the notice. PO will drop the proceedings and issue an order in Form GST Reg 20 if the taxpayer provides a satisfactory reply to the SCN OR. The taxpayer does not submit a reply to the SCN but instead files all pending returns and makes full payment of the tax dues along with applicable interest and late fees. Cancellation order in GST Reg 19 within 30 days. If the taxpayer fails to respond satisfactorily or is found liable for cancellation, the PO will issue an order of cancellation in Form GST Reg 19. The order must be issued within 30 days from the date of the application for cancellation under Rule 20 or the reply to the SCN issued under Rule 22(1) or 21A 2A. The order will include directions for the taxpayer to pay any arrears of tax, interest or penalties, including amounts under Section 29(5). Let me explain the financial implications when registration is cancelled, which is covered under Section 29(5). When a registered person's registration is cancelled, they must debit their electronic credit or cash ledger with an amount equal to the higher of the following. First option, ITC availed on stock of inputs, semi-finished, finished goods, capital goods, or plant and machinery held immediately before the cancellation. Second option, output tax payable on such goods. The logic behind this provision is simple. When you registered, you claimed input tax credit on your purchases. If you're cancelling registration and still have goods in stock, you need to reverse that credit benefit since you're no longer part of the GST system. The law ensures you pay the higher of what you claimed or what the current tax liability would be. Let me explain the special rule for capital goods and plant and machinery. Special rule for capital goods, plant and machinery. For these items, the higher of the following needs to be paid. 1. ITC claimed reduced by a prescribed percentage based on usage. This recognizes that capital goods depreciate over time. The longer you've used them, the less you need to pay back. 2. Tax on the transaction value as per Section 15. This is the current market value approach. This special treatment for capital goods acknowledges their long-term nature and prevents unfair burden on businesses that have legitimately used these assets over time. Now, suspension is a temporary measure. Suspension during cancellation proceedings. When a registered person, RP, applies for cancellation or the proper officer, PO, initiates cancellation. the PO may suspend the registration pending proceedings. Suspension relieves the RP from routine compliances such as filing returns. Circumstances of suspension. 1. Deemed suspension during pendency of cancellation proceedings. If a registered person applies for cancellation, suspension begins from the application date or date requested for cancellation, whichever is later. 2. Suspension by proper officer. PO can suspend registration if there are reasons to believe it is liable for cancellation. Suspension is essentially a protective measure that prevents continued operations while issues are being resolved. 3. Suspension due to discrepancies. When there are significant differences in the returns furnished by a registered person under Section 39 with the details of A. Outward supplies furnished in GSTR 1 or B. Inward supplies derived based on the details of outward supplies furnished by his suppliers in their GSTR 1 or such other analysis or anomalies may trigger suspension. Rule 21A2A. Process. Notice issued in GST RAG 31 requiring explanation within 30 days. Suspension notifications GST RAG 31 are sent via email or portal. RP must respond within 30 days using GST RAG 18. PO may either drop the proceedings GST RAG 20 or cancel the registration GST RAG 19. This provision targets potential data manipulation and ensures accuracy in reporting. Let me explain what happens during suspension and how it can be revoked. Restrictions. During suspension, RP cannot make taxable supplies or issue tax invoices. Filing returns under Section 39 is not required for the suspension period. No refunds will be granted under Section 54 during suspension. Rule 21A3A. Revocation of suspension. Suspension is revoked upon completion of proceedings. Rule 21A4. Furnishing all pending returns if suspended due to non-compliance under Section 29's 2, B or C. Provisions on revocation. Revoked suspension requires compliance with revised invoice, Section 31, 3A. First return, Section 40, for supplies made during suspension. These provisions ensure that suspension serves its purpose while allowing for restoration when compliance is achieved. Let me highlight some important additional points about cancellation of registration. UIN holders not eligible for cancellation. A person with a unique identification number, UIN, under Rule 17 cannot apply for registration cancellation. Rule 20. UIN holders are typically UN bodies, embassies, etc., who need permanent recognition. Liability before cancellation. The cancellation of registration does not absolve the taxpayer of their liability for any acts of commission or omission committed before or after the date of cancellation. All pending liabilities and compliance obligations remain enforceable by law. Section 29(3). Cancellation doesn't wipe your slate clean. Deemed cancellation across acts. Cancellation under SGST, UTGST is deemed to apply under CGST, Section 29, force. This ensures uniformity across the GST system. Notification of cancellation. Upon cancellation, the taxpayer will receive an SMS and email notification. The cancellation order is sent to the primary authorized signatory via email and SMS. Restrictions on filing returns. Returns for periods after the cancellation date cannot be filed on the portal. However, returns for periods prior to the cancellation date can still be submitted. These points ensure that cancellation is handled properly and all stakeholders are informed. Finally, the revocation of cancellation under Section 30 and Rule 23, which allows restoration of cancelled registration. Eligibility to apply. If a registered person's GST registration is cancelled suo motu by the proper officer, they can apply for revocation in GST Reg 21 within 30 days from the date of service of the cancellation order. Extension of time. The 30-day period may be extended by additional the Joint Commissioner up to 30 additional days, by Commissioner further extended by up to 30 more days. If registration cancelled for failure to furnish returns, the applicant must first file all pending returns up to the date of cancellation, pay taxes, interest, penalty, and late fees due for these returns. Decision process. If satisfied, the proper officer may revoke the cancellation within 30 days of receiving the application and inform the applicant by order in GST Reg 22. If not satisfied, the officer must issue a show cause notice SCN in GST Reg 23 to the applicant, allow the applicant to respond within 7 working days in GST Reg 24 and dispose of the application, accept, reject within 30 days of receiving the clarification. Returns to be filed on revocation. Cancellation effective from date of order. Pending returns for the period after cancellation must be furnished within 30 days from the revocation order date. Cancellation with retrospective effect. Returns for the entire cancelled period. Effective date to revocation date must be filed within 30 days of the revocation order. Let me conclude the revocation topic with its limitations and the integrated approach. Exclusion. Revocation cannot be applied for by UIN holders, UN bodies, embassies, or other notified persons. GST practitioners. Registrations cancelled at the taxpayer's or legal heir's request. These exclusions make sense because UIN holders have permanent status, GST practitioners have professional obligations, and voluntary cancellations represent the taxpayer's choice. Integrated approach. Revocation under SGST or UTGST is deemed revocation under CGST. This ensures that the revocation is effective across all GST laws simultaneously. The revocation process provides a safety net for taxpayers whose registrations were cancelled suo motu, allowing them to restore their status upon compliance. That brings us to the end of our comprehensive lecture on GST registration. Today, we have covered major areas that form the complete framework of GST registration in India. We began by understanding the fundamental concept and legal framework of GST registration, then explored who is liable for registration under both threshold-based and mandatory criteria. We examined persons exempt from registration and the process of suo motu registration by authorities. We walked through the detailed registration procedure, including Aadhaar authentication requirements and the issuance of registration certificates. We learned about amending registration details when business circumstances change. Finally, we covered the cancellation of registration, both voluntary and suo motu, along with its financial implications the concept of suspension, and the revocation process for cancelled registrations. Understanding these concepts thoroughly will help you navigate the GST registration requirements confidently and ensure compliance with the law. I hope this session has provided you with a clear understanding of GST registration provisions. Thank you for your attention.